Hey, it's Mike. I am not an investing guru. I'm an average guy sharing my investment journey on the internet. In this week's video, we're talking about how much my $300,000 Xdte position paid me out. We'll go over the portfolio, some spreadsheets, if you want to see that. On this channel, we like to borrow money. So we borrow money, and what we do is over the years, we worked hard, picked up overtime shifts, and we use money to buy good quality holdings. We had really good foundational holdings, and we use this money to buy foundational holdings. So this could be really good single stocks. This could be really good ETFs. Whatever it is, we have for the last many, many years, I have acquired a whole bunch of money. So I invested a total about $54,000 of my own money, and this is how much my portfolio is valued. So any extra money I was throwing into the market to grow this portfolio. So what I've been doing is now I borrow against these foundational holdings. So what are my foundational holdings? So I own a Tesla position. It is about $371,000. If you're not comfortable using Tesla, you can do the S&P 500. You could do triple Q, whatever makes you comfortable and sleep at night. You can have that as your foundational holdings, and you should predominantly use your own money to buy this. So, you should have spent years, acquiring some wealth, and what you want to invest in is something that's going to grow over time, because what the strategy involves is you're going to get growth from your foundational holdings, but then you're going to get the income from the borrowed money. And it's going to make a little bit of sense here in just a second. But if you want your portfolio growing 10+% every single year, and you want to invest in things that will do that. Without that, you're not necessarily going to get growth into covered call income funds, which is what we invest in. So what will happen is if you invest in for example, I opened up a $300,000 position in Xdte, and essentially what that is it sells covered calls on the S&P 500, but they don't sell specifically covered calls. They sell synthetic covered calls. So they create this phenomenon where you buy a call, then you sell calls, and that creates a synthetic position because the call position that you bought acts as the shares, even though they're not technically the shares. And so what you're doing is you're taking the growth of the S&P 500 and you're transferring that to income. And that's exactly what Xdte does. Whereas if you own the foundational holdings, that's where you want the growth. You want the income investment to pay the margin down or, fund your lifestyle. Whereas the foundational holdings should grow so that eventually over time you can borrow more money and then, have a better lifestyle. So just like with anything, you have to track goals, or you have to have certain goals in mind. Like you can't just be doing things without any path. Like even a path on a napkin written out is better than no path. So what are our goals with this portfolio? So, we're growing, our growth stocks are increased, we can borrow more. And for the last year now, I have not been putting any of my own money. So my goal with my brokerage account here, my goal is I'm not putting any more money in soon. I have a 401k, I have my Roth IRA, and I have my brokerage account. My brokerage account, I put the extra money in from all the overtime hours I picked up, whatnot, and I don't want to use my own money. So the goal here is from these covered call funds is I want them to generate income for the portfolio. So this side here, the borrowed money is supposed to generate income, whereas this is supposed to be the growth of the portfolio. So going back to the goals, we want to turn derivatives to assets. At some point, I want this borrowed money to fund my lifestyle. And in doing so, I also want to use some of this money to continue buying quality holdings. So some of this income here, at some point when my mortgage is paid off and all my little metrics are met, then I would like to use this money to buy more Teslas. But at this point, I think I'm cashed out for Tesla. Like I'm good. I would just invest in the S&P 500 or in any companies that I feel are undervalued. But, we're derivatives to assets. And then the other goal on the channel is like we're borrowing other people's money. To get ahead, sometimes you have to do risky things. Doing something could be risky. Doing nothing is risky as well. So you have to decide what your risk tolerance is. For me, I'm doing this in a safe manner. Margin status risk is low. We're doing this in a safe manner to generate this income. Okay. And then ideally we want to invest in income funds that maintain NAV. So that's another goal. And then again, growth stocks increase, can borrow more. So for example, my account is about $371,000, my Tesla position, but the account value in the Robinhood doesn't say that because of these call positions I'm selling. But once this is $1 million, I can borrow, $500,000, $600,000, and then eventually pay us massive amounts of income. Now, all right, we talked about the strategy. Let's talk about the actual payment. This is why we all came here. So the $300,000 position paid me $1,896.89. Pretty good amount of money. That comes out to about like $6,000 a month, $5,000. Pretty good chunk of change. And so, technically, if you had no margin, you had a paid off mortgage, you're retired with this. This is the goal. This is the dream. So you're retired. You don't have to work. You get $2,000 a week. That's a win. All right, let's go over the things that we track about here on this portfolio. Let's go over the last week. So let's talk about the actual S&P 500 real quick here. So in the last week, the S&P 500 is down $2.51, which comes out to 0.42%. Not really any gains or losses here. Let's look at the overall last year. Obviously, it's been trending up mostly here. And now we're in this kind of consolidation phase here. So at this point, the market's trying to decide, are we going down or are we going up? Regardless of what happens with the market, we will be okay because our margin maintenance is in a safe spot. So if you go to the margin maintenance here, so we have a low risk and you have $187,000 margin buffer before I get margin called. So that's a 75% drop. So if this portfolio drops drastically, I have a lot of room for it to drop. And if you look at my track record, the lowest my portfolio has ever gotten to was $118,000. So even at my lowest point, down 50%, I still had a solid buffer before I would get margin called. All right, moving along here. So, I am selling 9 covered calls on my Tesla position. So I have 900 shares of Tesla. I sold covered calls. Tesla moved up, had to keep rolling my calls, and I had to roll them out all the way until 2027. I did not want to do that. It hurt my soul to do that because I know in 2 years Tesla will be worth more. But as I unlock more time, I will keep rolling them up so I can unlock more and more money. So my overall, let's go to the Tesla position because this is what's truly driving the portfolio growth. This is not the income portion. My total portfolio value is $371,536. As you can see here, total return of $130,000 off this $267 cost basis. My true cost basis is around $180, $181 a share. So technically it would be a lot higher than that. This is just talking about the different option position that's open. You can see if you were going to borrow money to invest in Tesla, it costs 30% maintenance requirement. And that is it about Tesla. Because of my different option investing and investing in these covered call funds over the year, I had 834 shares. I was able to purchase an extra 66 shares because of using margin and investing in these income funds. And when I sold out of my Tesla positions and my AMZ positions, I was able to buy 66 more shares of Tesla to even it out to 900 shares. And I think at this point, I am no longer going to be putting any more money in Tesla. And what my next moves would probably be is anything in my value playlist here. So I have almost 84 different companies here that I'm keeping an eye on. So if anything's looking valuable, then I'll probably jump in on it. But right now, I think I'm pretty good with investing in Tesla. If anything, I might just pick up SPY shares, but that is on a side note. Let's go over to the Xdte here. So, for the last day, we're up 1%. Last week, we're up 1.36%. When I bought Xdte, we'll show my 3 different 100K tranches that I bought it in. Just got to show proof. Market buy, market buy, market buy, 100 to 300K. So $300,000 position. You can see here the payout. 5,641 shares with a payout of 33 cents a share comes out to $1,800. This is fantastic. I love when money comes in. Don't we all? That's why we're doing this. But as you can see here, I purchased my shares at $53.18. Just like with anything that I invest in, the moment that I buy it, it drops drastically. That has been what my story has been in my entire investing journey. However, patience is a virtue, and over time, if it is a good investment, you will make money. Now, when you're investing in a covered call strategy, it is a bullish strategy. So what you're expecting is the stock market will be going up. However, stock market might not be going up entirely. I'm going to go to this PE ratio thing here, and I'm going to show you why I want to hold cash. So remember earlier on, I said that what I'm going to do is I'm going to be holding cash. This is why. This is the only third time in history we have been in the most expensive market. So it's 2025, we're at 37.74 PE ratio. The other time was in 2021. And the other time was in January 2000. So the dot-com bubble, we were at 42. So I do believe we can have some room we can go before we go down. The average median PE ratio is 16. So we are double plus some in terms of valuation. So what ended up what's been going on in the market is we got the animal brain, the lizard brain in the market, and Trump's in office, businessman. Everyone's going like, wow, we're going to make money. Businesses are going to be great in America. However, that has caused multiples to expand. When multiples expand, they become pricey. And when things become pricey, they're not as valuable. So for example, we're paying a PE ratio of about 37 to buy companies when in the past we were paying 16. So in the past we were buying companies on sale. Right now we're paying extra and then some to purchase these companies. For example, like when you're buying, I don't know, when you go to a store, some people like to buy things on sale. It makes you feel good. However, you wouldn't go to the store and then when you go in the store, you go, oh, wait, this is marked up 20%. Maybe I should go ahead and buy that. This is the third time in history that this has been the most expensive PDE ratio. Multiples have expanded. Company earnings have not expanded. So yeah, companies are making an extra couple percentage per year in their revenue and their operating margins, things like that. But ultimately, companies aren't making substantially more money to justify this 37.74% PE ratio. So that's why I'm kind of holding cash, because when this market does kind of drop down, I'll purchase some things on sale. So again, with that extra cash that I'm going to be holding, I'm going to pay down that margin. But then also, if the market does get dropped down to a 15 PE ratio, I mean, that is when you're going to get the most gains in the market. I don't believe in timing the market, but when there's certain trends here, you gotta listen to it. When the market is saying one thing and people are piling in, you should probably be doing the opposite. When others are greedy, you should be fearful. When others are fearful, you should be greedy. Warren Buffett said that. But then at the same time too, I'm saying that the PE ratios are heavy, but then I also opened up a 300K Xdte position knowing that this is a bullish strategy. The reason I'm doing that is because as long as it's paying every single week, I'm cool with it. And over time, I'm not going to be cost averaging in every single dollar, but then over time, if it does drop pretty drastically, I could buy this in at a cheaper price. And then when it recovers, I would have cost averaged my basis a little bit more. But again, we're investing this because it's a weekly paying strategy. It's margin maintenance 25%. And that is great. All right, let's talk about the other things that we like to follow on this channel. So as you can see here, total equity, $533,000. And what I really want to do is, with trying to hold cash, what I also want to do is I want my margin use to be 50% of what my equity is. So for example, I just hate that it says 249. I really wanted to say 371. If I can get rid of these calls, I would, but it's too expensive to buy them. All right, going back here. Technically, say this is $400,000. If this was a $400,000 equity position, I realistically want to have about $200,000 of margin use. So I want it to be 50% of the equity, not the overall portfolio. So right now, when I'm getting all these payments from Xdte, I'm going to chip away at this margin amount. And, I feel once I'm in a much safer zone, I shouldn't say safer zone because I feel we are in a very safe position right now, but I would like just more peace of mind to drop this down to more so 50% of the equity value, not the overall portfolio value. As you can see here, the gains, always when I invest in something, it goes down right away. So if you ever watch me do something, just do the opposite. You'll definitely make money. As you can see here, margin used, it was $285, got the $1,800 payment. Now it's this. Margin maintenance went up from $50,000 to $56,000. And as you can see here, outstanding interest is about $669. So again, when you're borrowing that much money, it costs. But my borrow amount is 5.25%. All right, carrying on. So in our all income thing here, I'm going to show you this new thing that I'm doing here. So on my all income tab here, I've been kind of tracking what I would pay in taxes. And when I do file my taxes in February, once we get the whatever forms from Robinhood, I'm going to actually see how much I pay in taxes on this portfolio. And a lot of these have been like return of capital and whatnot. So I just want to see how much I would owe the government. And then I'm going to keep track of it every year. So like 2024 is this year, I'll do 25 and so on and so forth. And then every year I want to see how much I'm paying in margin and taxes. And I just want to compare how we're doing. And Also, I want to compare the account value size as well as how much income is that account generating. Okie dokie, let's go to the actual Xdte tab. So, I believe that if you run the numbers, should be about $60,000 a year. And I think that's on the low end. So about 1.6% a month, which is 20% a year. So we got this payment here. We got charged $5 for Robinhood Gold, and haven't gotten the interest payment yet. So the payment usually is about the 18th. But besides that, that's everything on the video. So if you guys have any questions, definitely let me know. Hopefully you learned something through it. But yeah, just making some money, borrowing other people's money and trying to scale this. So if you guys have any questions, definitely let me know. But hopefully this is motivating so you guys can start doing something similar. But again, at your own risk, hope you all have a good one and peace.